Good morning, everybody, and I'd like to welcome you to the release of the Australian Horticulture Statistics Handbook for 2025 that covers the 23-24 financial year. I'd like to also acknowledge that we have had around 997 RSVPs, so we're expecting a significant number of people to join us today in what is our 11th edition of Australian Horticulture Statistics Handbook. Each year, Hort Innovation works across the breadth of Australian horticulture. Our vision is for a profitable and sustainable sector built on innovation. Australian growers continue to face historic highs when it comes to input costs and have recently felt the impacts of biosecurity incursions and natural disasters. It's also important to acknowledge right now the situation being faced in the north of Queensland, where growers are realising the impact of recent floods and storms. Each year, Hort Innovation invests on behalf of Australian growers, levy payers, who are our members, more than $160 million in research, development and marketing. We know our role is to capture value for levy payers, that in turn increases their profitability and, importantly, their long-term viability. Making better decisions is a central part of this equation. So here at Hort Innovation, we play an important role collecting, analysing and distributing data. Today, the 11th edition of the Hort Stats Handbook is 380 pages long and covers more than 75 different horticulture lines. I'd like to kick off by acknowledging the team here at Hort Innovation, led by Lucy Noble, and our partners at Fresh Logic, led by Martin Kneebone. Today, the news is positive. Australian horticulture is well on the way to becoming a $20 billion sector by 2030. The headlines that you're going to hear more about through the seminar are that Australian horticulture has achieved record production value, reaching $17 billion in 23-24. This is a 4.3% increase on the previous year. Under this, the fruit sector has led the growth, with production values increasing by almost $500 million, or 7.8%, to reach a value of about $6.82 billion. This was driven by strong performances in berries, citrus, and bananas. Export growth, a critical element to our viability, reached a record high of $3 billion. This has been driven by fruit exports, particularly avocados and citrus. Our vegetable sector continues to go to strength. While vegetable volumes increased, overall vegetable production value declined by 2.4%. We have witnessed and will report on a recovery in the nut sector. Off the back of a difficult 2022-23, production has increased by $484 million. A significant growth to being around a $5.7 billion sector. Retail and food service is continuing to grow, and food service grew by 4.6%, achieving the highest record volume in 5 years. I'd now like to throw back to Lucy and Martin to continue the seminar. Thank you.
Thank you, Brett, for the introduction. And I wanted to welcome everyone today to this special online event where we will be launching the 23-24 Horticulture Statistics Handbook. The Hort Stats Handbook, as it's commonly known, is the leading resource for the horticulture industry statistics. And the launch of this year's edition marks the 11th annual publication of the Hort Stats Handbook. As Brett mentioned, the launch of the handbook marks a really important time of year where we get to look back on the year that was 23-24 and the horticulture sector's performance. So I wanted to thank you all so much for joining today, and I look forward to the next hour spending with you all going through this year's performance. Before we get started, I'll just quickly go through some housekeeping in terms of the webinar today. As we go through the presentation today, please interact and use the Q&A function, which is on the bottom panel of your screen within the Zoom browser. The questions will be available to us and we'll be able to answer those at the end. We will try our hardest to get through as many questions at the end, but if we don't get to all questions today, we'll endeavour to answer questions following the webinar or alternatively, you can always contact us at communications@horticulture.com.au. Please also note that Martin and I can't see you, and all webinar participants, or sorry, attendees are muted as well. And finally, the webinar will be recorded today and posted online and sent around to everyone following the webinar. My name is Lucy Noble and I head up the Industry Insights team here at Hort Innovation. The Insights team, together with the support of specialist food market researchers and analysts at Fresh Logic, manage the delivery of the Hort Stats Handbook. And I'm very pleased today to be joined by Martin Kneebone, the Managing Director of Fresh Logic. So with that, Martin, I might pass over to you to say hello.
Thanks, Lucy, and thanks, Brett. I'm Martin Kneebone from Fresh Logic, and we've been lucky enough to be the provider for the Hort Stats for the last 11 years, which has been, I guess, an encouraging and an evolving thing. We welcome that, and we enjoy the fact that more people seem to be making more informed decisions, and would like to think that we might contribute to that. I look forward to going through this today and talking through the highlights, and again, welcome the chance to talk about what we've been able to achieve with Hort Innovation.
Wonderful, thanks, Martin. And over the course of the next hour, we're going to break this webinar out into a few parts, and we're going to cover a lot of ground. In the first section, Martin will provide some perspective on the handbook resource itself, looking at the origins, the methodology, and how the handbook's gotten to where it is today over the last 11 publications. And then after that, I promise we'll get stuck into the data and insights. While Martin and I today will be taking a look at some of the key insights from this year's handbook. As Brett said up the front, the handbook itself covers more than 70 fruit, vegetable, nut, and amenity categories. It's got both an online interactive Tableau dashboard and also PDF versions, which contain just shy of 400 pages of insights. So the handbook truly is an incredibly in-depth resource, and the reality is that we're only going to be able to cover a fraction of it today over the course of the next hour. So if you take anything out of the presentation today, it is really that I encourage you to go seek out the handbook, use it to its full capacity, and enjoy. So with all of that being said, let's get into the first part of the presentation and the session today. As you know, the handbook, this is the 11th edition of the Hort Stats Handbook. It was originally developed to fill a gap in reliable and trusted statistics for the horticulture sector. Over time, the handbook has evolved a lot, along with the statistics environment that we're all operating in, but the opportunity for the handbook has remained focused on two main areas. Firstly, the handbook provides a really comprehensive overview of the Australian horticulture sector and has sought to reconcile industry data to provide that unified sector overview, which can often be easier said than actually done. And then secondly, it serves as a really critical resource and source of information for our industries to track trends and overall performance over time as well. A key factor in the success of the handbook is the really robust and quite unique methodology that sits behind the handbook data as well. So to give you some insights into that process, I think now's a good time to pass over to Martin Kneebone and share a bit about the approach, Martin, and methods used to compile the handbook. So with that, I'll pass over to you.
Okay, we call the approach that we've developed over the years the through chain, which essentially is designed to assimilate and reconcile the diverse array of data that's available. We're dealing with a situation that's framed by a short life perishable product, and we're in a contained market that responds directly to volume pressure. So with those dynamics, we've sought to get information from all parts of the supply chain. Essentially, we reconcile what's produced with what's distributed, and have built and in some cases created targeted research tools together and established values and volumes at various levels. Over the 11 years that we've been doing it, we've sought to extend into more detail at distribution level and make the means by which the information is disseminated user-friendly, not the least of which is then building electronic versions and sort and filter things for people who may just be looking at things by category. It's wide, it's quite diverse. We enjoy the fact that it touches people from 75 different categories who all have input into guiding and steering and helping us sign off on the various volumes and values that we define, and then adding it all up. So it's complex, but has been a very satisfying thing to be part of.
Thanks, Martin. And I think illustrated quite simply in this diagram here is really that breadth of data sources and information. And critical to that is our partnerships with industry as well. So I want to acknowledge that, I think, at the start, because that's a really key part of the data and information that is provided in the handbook. And I think you agree, Martin.
Yep, I agree. The support we get from all the PIBs and a number of individual commercial stakeholders and a body of commercial work that we do, which validates to a big extent, makes it happen. Without that, it wouldn't be possible.
Wonderful. And with that, thanks for that, Martin. We're going to look in the bag, look into what we've had in the last year and move into the next part of the session. And we're going to start by looking at some of those longer term trends, because now that we do have 11 publications under the belt, 12 years of data, we can start to see really some of the key trends that are shaping the considerations as we look at the horticulture sector over the last 11 editions. So what we can see is that it's really clear that the horticulture industry has been on a real growth trajectory, and a major milestone was reached in 23-24 with the industry reaching $17 billion in production value for the first time. This is a real testament to the resilience of the sector, especially considering the challenges faced in recent years, whether that be adverse weather events, global market disruptions, pest and disease incursions, or rising input costs. And the sustained growth sees the average annual growth rate, when compounded annually, sitting at 5.5%, which is a real significant achievement considering those challenges faced, and notwithstanding some of the really recent ones that we've seen up in Far North Queensland with the flooding as well. Again, this year, the horticulture sector saw production value, or farm gate value, grow with around $700 million of additional value added over the last year up to June 2024, which marks a 4% increase on value in the last year. The record production value of $17 billion was driven by significant increases, particularly in fruit, which saw production values increase by nearly $500 million or 8% to reach $6.8 billion. And whilst values were seen to increase across the board for the majority of fruit lines, berries, citrus and bananas saw the greatest gains on the prior year values. The value of the hort sector was also supported with a recovery seen in nuts, which came back off a difficult 22-23 season, with production values increasing by, again, nearly $500 million to reach $1.23 billion. Of this recovery, almonds alone saw value rebound 63%, gaining $337 million off the prior year. However, as is almost always the case in horticulture, it wasn't a one-size-fits-all story. And while the overall value of the industry increased in 23-24, vegetables ended the year slightly softer, with overall production values declining by 2.4% to come back to $5.7 billion. The production value of the amenity sector, so that includes cut flowers, nursery and turf, also declined. And the decrease was driven by production value declines in the nursery sector, which fell nearly 5% to $2.65 billion in 23-24. As can be depicted as well by the yellow line on the chart, overall production volume increased by 7% in the last year. And as we'll explore on the next slide, export volumes also increased across the board when looking at fruit, vegetables and nuts. Martin, before I hand over to you, I think one thing that is worth reiterating here is the period of time that's captured in the latest handbook release. Because the handbook covers 1st of July 2023 to the 30th of June 2024, current or recent conditions affecting production and our growers or market conditions won't be reflected in this data, and potentially will be in the next handbook period. So with that, Martin, is there anything, I mean, there is a lot here, but is there anything that stands out to you in terms of the major drivers of production value over the last 11, 12 years?
Just in the last year, Lucy, particularly, we've seen a recovery in production volumes and several categories and some cyclical patterns that lifted it. And that lift translated into higher value and was greater than the adverse effects of the categories that were down. I mean, the big movers, tomatoes, avocados, summer fruit and berries, more than compensated for lower values in selected categories. And that has summed up what's happened over the years. We have times when some of the categories, groups of categories are under 75, are up or down, But it's not one size fitting all, and we'll get different conditions. We have different exposure to export markets, and that basket of exposure seems to be holding up a resilient level of growth over the period of time. And it's happened again in the last year, particularly due to increments of production recovering and some stronger volumes.
Thanks for that, Martin. And I think you provide me a good segue to get into our next slide, which is to look at just that, look at exports. Australian fresh horticulture exports reached a record high value of $2.75 billion in the last year, which was driven by strong growth, again, in fruit exports, particularly in citrus and avocados. Fresh horticulture exports in 23-24 financial year made up nearly 12% in terms of the volume of horticulture. And when we look at back on the growth that we've seen in exports over the last 12 years, it's clear that exports have also been themselves on a real key growth driver for the industry at large. The compound annual growth rate over the last 12 years remains at nearly 10%, which reflects the overall importance of these export markets for the sector's overall growth. And I think it's a really important thing to note here that while the overall value of fresh horticulture exports rose in the last financial years, there were some outliers amidst the strong export performance in 23-24, and a notable one of that being table grapes. And table grape export volumes decreased 19% in this reporting period, with values also decreasing, albeit at a slightly lesser rate of 14%, which played out in table grape volume export values coming back nearly $80 million. So Martin, at a category level, what changes are you seeing when we look back at these export values and volumes?
Well, if you look at the bigger categories, Lucy, we've got 7 major categories that we would say are at a higher level. They're all above 40,000 tonnes per annum exports, and 6 of those categories saw stronger volumes and either held or stronger prices. So that's a positive indicator, and that more than compensated for a big adverse season for grapes, where their production conditions were affected and lowered yield. There's also a second tier of categories generating export volume, led by avocados, melons, and summer fruit, less than 20,000, or avocados at that level. That's encouragingly evolving, getting, potentially headed towards that higher level. Most categories, prices are holding as the volume lifts, with some exceptions in the emerging second tier. And encouragingly, this confirms the market acceptance of a higher quality product and value from Australian origin. It's over a wide enough range of categories, I think, to fairly draw that conclusion, and that's a great platform for more exports.
Yeah, and Martin, I think the kind of final point I wanted to make with exports is that when we consider these trends, it's evident that a lot goes into the work and to build these markets, and it doesn't happen overnight, kind of as you're touching on there as well. And the path to export is dynamic, it's complex, and there's various factors that influence the ability to do so, and then finally playing out these numbers. So with all of that being said, I think these are headline figures, and I encourage you to refer to the handbook resource itself, which really provides a much greater level of detail and depth into the trade figures for all industries, and supports some of those nuances that you speak to, Martin, as well, and that we see playing out here in the export space as well. So picking up where I just left off, I don't want to understate the nuances that exist for horticulture trade, but I think it's really interesting when we now have this kind of longevity of data and looking back at horticulture exports and imports over the last 12 years. Some of the longer term trends we're starting to see, the volume of fresh imports have decreased at a rate of 2% compounded annually over the last 10 years. This is set against a greater than 4% CAGR for the fresh exports over that same period. Now, it's important to remember that the CAGR is just an average, meaning it doesn't show the years of particularly strong growth. And similarly, it doesn't show the years where we faced significant challenges, which particularly the 3 years following COVID, so from 2019-20, which really impacted our ability to get product to those export markets as well. But in saying that, it is really clear that the fundamental underlying drivers to produce high quality Australian produce that serves both that Australian domestic consumer market as well as our expanding international market opportunities is really evident in these figures here. And I thought I'd bring them just to quickly kind of show that depth in the data that we now have over the last 12 years. Looking at where our fresh horticulture produce ends up we can see that the flow and volume of produce going into processing, exports, and domestic supply all continues to increase. But what really stood out to me here, firstly, was the increase in fresh domestic supply, sitting at an average of 1.5% growth over the last 10 years. And interestingly, according to the Australian Bureau of Statistics, the 10-year average growth rate of the Australian population is similarly sitting at around 1.4%. And while the annual growth rate for the year ending that just was, so the 30th of June 2024, sat slightly higher at 2.1%, domestic supply of fresh horticulture going into both retail and food service has really stayed at pace with population growth. I think the other interesting thing, and I might throw to you in a moment, Martin, but the other thing that comes and may come as a surprise to some is the increase in volumes of Australian horticulture being processed. So, Martin, with that, particularly the growth we can see in processing, any commentary from your end?
Yeah, on those three pathways to market and the volume contribution patterns of those three pathways over the 10 years really reflect strong growth in exports. The contribution of the other two channels, domestic supply and processing, have remained pretty similar, processing at 29, 30% and domestic market at 50 or 60. So the big mover over that time has been exports, which is probably undoubtedly had a positive impact on price and earnings at production level. Processing is substantial. It's 2 million tonnes and often doesn't be sort of acknowledged for what it is. It is dominated by 2 or 3 categories, with potatoes, tomatoes and juicing oranges making up over 70% of that value, but it's a significant portion of how we generate production values, and I think shouldn't be overlooked, and it's maintained its share of what we do.
Yeah, absolutely. And there has been a lot of change within that processing sector and what makes up the processing as well. So again, some of those nuances don't play out and when we're looking at overall category drivers for processing, but again, level of detail in the handbook I think really illustrates that as well. So with that, we are going to move on to now a bit more detail around some of the performance of the overall sector, stepping through each of the fruit, vegetable, nut and amenity categories that are reported on in the handbook. Starting with fruit, and what I haven't included in this slide, but I think it's important to acknowledge, is that there's a fairly high degree of concentration of the value of fruit, with the combined berry, citrus and table grape categories accounting for 46% of the total production value for fruit. If we then look at the top 8 fruits by value, and looking at that table that we've got there as well, so including apples, bananas and avocados, as well as grapefruit, lemons, limes and rhubarb, we're looking at over 3/4 of the total value of all fruit. But there is a lot more to the fruit story than just that. And FY24 was a really strong year for fruit, with production values reaching a record high of $6.8 billion, which marks a nearly $500 million increase on the prior year. Now, if we break that down and we look at some of the key drivers and key categories of growth, growing farm gate production value for fruit was driven by increases across the board, as I said, but particularly with large increases in berries, citrus, bananas, and steady rises in apples and avocados also. We kind of mentioned table grapes earlier, Martin, but while table grapes remain the single highest valued fruit, 2024 saw both volume and values come back significantly on the prior year. Table grape volumes reduced 20%, as did export volumes, while production value decreased, but at a slightly lesser rate of 18%. One category that continues to show signs of increased capacity to serve both domestic and export markets is the berries. And in 23-24, the berry cluster, that being blueberries, rhubarb and strawberries, maintained its position as the highest production valued fruit cluster and also marked the cluster's highest value year on record. Over the past decade, berry production values have steadily increased from $567 million in 2013 to $1.3 billion in the 23-24 financial year. Production volumes have also increased and reached record highs for all berries in 23-24, collectively rising by 26% over the year, which is slightly higher than the 21% increase in value the prior year. Looking just at blueberries, blueberries have consistently shown strong growth, with production values more than tripling over the 12-year period. And in the last year, values rose 20% to reach over $500 million. Strawberries similarly saw production values tick over $500 million, and while strawberries have seen some variation in values over the years, their farm gate values have consistently exceeded $400 million over the past 5 years. And unlike blueberries and rubus, which have seen the farm gate price per kilogram decrease over the last decade, the price per kilogram of strawberries has maintained relatively consistent and in fact seen a positive price per kilogram growth rate in the last 5 years as well. Rubus have shown significant growth also, particularly in recent years. And rubus achieved second highest annual growth rate in 23-24 with a production value of $290 million total. They have also had the highest growth rate in production volume among all fruits over the last 10 years, increasing from just over 2,000 tonnes in 2012-13 to an all-time high of 13,000 tonnes in 23-24, which marks an increase of 518%. What that means is that more rubus are available now to Australians than they ever have been before. Looking at another large category where we've seen consistent growth again is also citrus. So citrus reached its highest recorded farm gate production value in 23-24, cracking $1 billion to reach $1.1 billion, which marks an increase of 14% on the 22-23 values. Volume also increased by 8%, with export volumes and values rising by 17% and 23% respectively. Sorry, I've just lost myself. Mandarins. Within the citrus category for mandarins, heightened values were really driven by the mandarin growth, which reached $435 million in 23-24. Over the last 5 years, mandarins are really interesting. Their value has increased by $137 million, which comes to an average compound annual growth rate of 8%, with volume also increasing at 8% annually. Oranges recorded farm gate production values reached a record high in 23-24 at $480 million. Another good year for the avocado industry, which reached its highest recorded farm gate production value in 23-24 at $590 million, marking a 5% increase on the prior year. The value and volume of avocado production have nearly tripled what it was 11 years ago, and avocado exports continue to show really positive signs, with export volumes more than doubling on 22-23, whilst export values increased 63% over the same period. Bananas, another industry which had a good year. They had their highest recorded farm gate production value in the latest reporting period to reach nearly $700 million, which represents a 20% increase on the prior year. However, they did see a slight decrease in production volumes, which came back just 1.5%. And finally, apples also reached their highest recorded farm gate production value in 23-24 at $680 million, representing a 5% increase on the prior year. On the next slide, we're going to touch on some of the fruits with the highest growth rate over the last 10 years. But Man, there's a lot to cover here, and I'm interested to get your thoughts on what shaped this year's fruit values, both in terms of volume value increase and also potentially the impacts of less table grape production as well.
I think you've summarised the category level stuff, Lucy, very well. I would say that what we've seen is increases in volume that in the large majority of cases held prevailing prices and flowed through to generate a lot more value. Clearly buoyed by big portions of some of the crops on the screen going into export markets, mandarins particularly enjoying some early season windows and growing export markets as a result of that. And that's clever plantings in the right places. Most fruits generated more value than last year, the exception being table grapes, which probably left some opportunity gaps on the local market, which I think would have favoured some of the other grazing snacking lines. 20% less table grapes, which have managed a very successful varietal change, not being there, left a gap, and that was picked up by I think other categories enjoyed that opportunity.
Right, thank you, Martin. And as I said, we touched on some of this in the prior slide, but what we're showing here is those fruits with the highest value growth over the last 10 years. New production value heights were also seen, although not shown here, for persimmons that reached $18 million, pineapples that reached $85 million, marking an increase of 11%, and mangoes which reached $220 million. When we look over the last 11 years, it's encouraging to see that some of the more emerging fruits have also seen some of the highest growth rates, with lychees having an 8.5% 10-year growth rate. Although a very different fruit category to lychees, cherries have also demonstrated an impressive growth trajectory with a 9.5% average growth rate over the last 10 years. 22% of all cherries grown in Australia were exported in 23-24, and with exports accounting for approximately 30% of the farm gate value of cherries, the role of exports have obviously, as you kind of mentioned just before, Martin, have obviously played a really significant role in the growth of some of these categories over time as well. Martin, was there anything you wanted to add here?
Yeah, just that 5 or 6 of these categories are grazing snacks, Lucy. And the other one, lemons and limes, enjoys strong demand through food service. So we've got this grazing, snacking consumer behaviour coming through as a preference for how people are eating. And we've got berries are growing globally, and they continue to generate incremental growth and take share off total fresh fruit. They're supported by the whole supply chain, largely because they're generating incremental sales and incremental consumption. When people buy berries, they graze on them. They're not limited to one meal occasion, and they continue to grow. And I guess that snacking behaviour and the demand for it is confirmed in the products we've got listed here.
Thanks. So now looking at vegetable production in 23-24, production volumes for the vegetable industry increased, but overall production value decreased. Value declines were seen across the vegetable category, which declined 2%, or $140 million in 23-24, and were particularly driven by significant decreases in fresh herbs, leafy salad vegetables, onions, and mushrooms. Potatoes remained the highest value vegetable, reaching a record production value of $1.1 billion, marking a 7% value increase and a 5% increase in volumes. Tomato production volumes recovered in 23-24, increasing by 36%, while value also increased, albeit at a slightly lower rate of 5%, and remained the third highest value vegetable. Recorded highs were also recorded for capsicum and beetroot, with marginal value growth seen for sweet corn, pumpkin, eggplants, Brussels sprouts, beans, and sweet potatoes. As I mentioned, mushroom production value fell in 23-24, below 400 million for the first time in 3 years, which marked a 6.5% year-on-year decrease, while volumes also dropped at a slightly higher rate of 8% on the prior year as well. I guess while the overall value or the farm gate value of the vegetable industry declined in 23-24, the long-term picture for the sector still boasts a 10-year growth rate of around 4% as well. So I guess that's one to keep in mind and balance it out as well. And Martin, I might throw to you, interesting for vegetables, we're seeing volumes recover across some lines while value has dropped off slightly from 22-23.
Yeah. Overall, a better year, a recovery year on top of more challenging conditions in 22-23, more volume and some price pressure evident, less options, largely servicing domestic market. A lot of the volume increases were from the 2 big processing crops of potato and tomatoes. The rest of the categories largely reflecting that dynamic of increments of more supply and degrees of price pressure.
Mm-hmm. And as we look at nuts, after a challenging year in 22-23, nut production saw a significant recovery in volumes, led by increases in almond production, which were up 39%, and macadamias, which came back up 11%. For almonds, the increases in production volumes were supported by almond exports, which also increased 14% to 121,000 tonnes. The overall production value of the almond industry rose 63% to reach $870 million in 23-24. Macadamia production value increased appreciably to $202 million, nearly doubling from the prior season. And over this same period, macadamia exports increased 34%. Pistachios experienced major increases in value, more than tripling in the 23-24 reporting period to reach $48 million, with the volume of production increasing at a really similar rate. With only very marginal volumes being imported, this means, again, that more Australian-grown pistachios are available to Australians than they ever have been before. I think when you look at nuts, Martin, it's a bit of a tale of two halves for nuts. Production increasing, but following a seriously challenging year for nuts in the prior season on a number of fronts.
Yes, it is. It's a recovery year, substantially led by almonds, macas, and then we're seeing some of the new pistachio production coming on. The organised export profiles of almonds and macas helping manage some of that volume, but that's a big bounce back, and I guess a positive platform for the future.
Yeah, absolutely. And last but definitely not least, looking at the amenities sector, the total value of production for the amenities sector, that including nursery, turf and cut flowers, was $3.24 billion in 2023-24, which was 4% lower than the prior year. The drop in production value in the amenities sector was largely driven by decreases in nursery, which fell nearly 5%, or $127 million, to $2.65 billion, whilst remaining the highest value individual horticulture category. And then we can see that turf increased nearly 2% to reach $301 million also. So now we're moving on to domestic fresh supply, and a really unique part of the handbook that's reported on as well. And as Martin mentioned, one of the unique parts of the Hort Stats Handbook is that fresh food service supply component as well. And anecdotally, I don't think there would be many people who could argue that the food service channel has not borne the brunt of a lot of changes in out-of-home food consumption, particularly over the last 5 years. And although not shown here, the value of the food service sector maintained its value in the latest reporting period after record highs in 22-23, reaching $2.1 billion worth of wholesale market share. Shown here is the top 3 fruit and vegetables which have the highest proportion of product in volume terms, entering both the retail and food service channels. So for fruit, lemons, limes, avocados and muskmelons have the highest proportion of product entering the food service sector, while table grapes, kiwi fruit and mandarins have the highest concentration going into overall retail. Overall, 86% of domestically supplied fresh fruit enters the retail channel, while 14% enters food service. For vegetables, there is less concentration of product entering retail, with 19% entering food service, which is led by the leafy salad vegetables and also onions. Martin, if I can throw it over to you, I'd be really interested to get your thoughts and comments here around what we've seen happen in the food service channel over recent years and where that leaves the food service channel.
Well, this chart again confirms that the retail sector is warming to and doing best with those snacking type products, table grapes, kiwi fruit and mandarins. They're the things that work well. In terms of food service all round, the spend on out-of-home food captures 40% of Australian households. Now, despite cost of living and CBD areas being under pressure because of more people working from home, it's a substantial component. It reflects really, in our view, a long-term market setting that warrants consideration. And food service, to be remembered, are seeking an ingredient for meal assembly, which is quite different to retailers that are seeking a product to trade. And at 40% of household spend, it warrants calibrating an offer around that different set of needs. They are far more receptive to a value-added product that can help their meal assembly process, but often they end up with the same product that's offered to retail. So an opportunity, a growing one. I think it'll expand beyond 40% of household spend, and with that, the opportunity just gets bigger.
Wonderful, thank you, Martin. And with that, we come to the end of this part of the webinar, and we're just going to go through some of the key takeaways and trends that we're seeing in the latest year of data. In 2023, the recognition of the horticulture industry has grown to be a $17 billion sector is incredibly significant. Significant gains are seen across the board for fruit and nuts, with notable mentions to berries, citrus, bananas and almonds, which saw more than $700 million of additional value being recorded at the farm gate alone. However, that's not to understate the myriad of challenges that have faced growers and the industry over the last year. And I think it's really important at this point to recognise that the handbook focuses on the value of the horticulture industry, but we know that that's a very different story and does not necessarily portray the profitability of horticulture growers across the sector as well. We saw exports rise to close to $3 billion in 23-24, which marks the highest annual growth in exports in the last 5 years. We know that exports continue to drive value in the horticulture industry, but we also know that these things don't happen overnight, and that there's been a lot of industries and growers with the foresight to build the export market into what it is now. Coming off the back of a difficult 22-23, production output recovered for several categories, with volumes returning to the levels of prior years as growing conditions stabilised. And this was particularly the case for fruit and for nuts. And finally, the outlook for the industry reflected through a lot of the trends and indicators that we're seeing in this year's handbook. It's a really great role for us as Hort Innovation to be able to provide ongoing R&D investment to deliver consistently high quality produce to consumers here and overseas, as well as marketing initiatives to encourage demand creation. It's an exciting time for the industry as we look out over the coming years. Martin, over to you. Is there anything that you wanted to provide as kind of a takeaway as well?
Our export marketing is a strength. It's been a driver of growth, and our capabilities are succeeding. And I think you can look at that and go, that's a great continued platform for growth. I think looking across all that, you can see, we can see incremental value still being generated in the domestic market by the likes of smaller portions, shopping trips and aversions to waste, creating a range of snacking products that are being purchased by more and more households. And categories that have done that have successfully added and captured greater value. I'll just go back to and close on the population growth is a wonderful stimulus to volume demand. And to put that in context, a 1% population increase translates into over 35,000 tonnes demand per year and over 120 million in wholesale value. Now we're running at twice that, so that's and we've enjoyed that. And as we heard in the presentation, our ability to distribute more volume into the domestic market has been pretty much in line with population. It's not a bad thing. Not a bad thing. So I would say a good position. It's good to see all the channels with good array of support around them. Perhaps food service would benefit from a little bit more. That's my closing thoughts, Lucy. Thank you.
No worries at all, Martin. Thank you. And as we head into the closing minutes of the webinar, I can see that we've got a few questions that come in here. But maybe to kick us off, Martin, as I pull these up, would you be able to explain the approach to modelling the volume of nuts and how it's different for fresh, and how is this handled within the model as well?
Well, we work pretty closely, very closely with the nut PIBs who guide us on the appropriate way to categorise, treat and time the capture of the periods that are relevant for the nuts. They have big proportions of volumes going into exports, and there is a need to capture those and roll them back in. There is a need to deal with the product in the form, the kernel form or the nut and shell form that is appropriate for those markets. And with their guidance, we've been able to calibrate that, I think, to outputs that suit them well. And this year reflects some changes in that approach.
Great, thank you, Martin. And the first question we've got here, are the value trends in nominal or real terms, Martin?
They are in nominal terms. They are not in real terms. They're in nominal terms. And the reason for that is that we've got a marketplace that's highly responsive to volume pressure in a contained market. And I guess we seek to profile that dynamic, which is the major platform for the modelling.
Yeah, great. Thank you, Martin. Noted for next year that we need to include that in the introduction of the handbook, because we do seem to get that question. Yeah. The next question we've got here is around productivity and profitability, and about production value. And the question is, increasing value obviously doesn't equate to increasing profit. It's widely known this has been a challenging period for producers, many operating at a loss. Can you provide any commentary on how this value growth aligns with broader inflation and input costs, i.e. is it above or below? Thanks. Martin, did you want to start and I'll tackle on?
I think we've seen it varies a lot by category. I think across fruit, it's been, with the exception of table grapes, it's been a positive year for growth. Vegetables haven't been, and the vegetable sector would have found things more challenging with clear increases in costs. I haven't got information, or neither is this analysis really in a position to say here's exactly what the added cost is, but broadly that's how I would say it's landed. The categories that have more exposure to export, and we've got some categories that are exporting over 50% of their production, are generally in a better position because those export prices are stronger. But it's hard for me to comment on exactly what the extent of cost input pressure is, other than to say that I think vegetables have had more of a challenging year than the fruit sector.
And I guess I would go alongside that, Martin, to talk to some of what we're seeing the results in some of the benchmarking projects, the Hort Innovation Fund in vegetables for this year in particular. We know that the data is showing, although we only have 1 year of data at the moment, that it is hard to be a grower right now. Margins are really slim, and we know that to be the case as well. And there's also a number of benchmarking projects for macadamias, for nursery, for avocados, for bananas that would all confirm a similar thing. In the last 2 seasons in particular, margins have been really, really slim for those industries too.
Yes,
Next
that doesn't surprise me.
question. Sorry, Martin.
That doesn't surprise me. That's what I would expect. Yeah.
We've got a question here. Does production reflect the value of declared sale, or is it known production volume times current market value?
It's production volume times current market value. That is reconciled with all the best information available on volumes through distribution channels. So it's not just that's what's produced. It's a combination and assimilation of those inputs. In some cases, particularly export, the information about the volumes going to those markets is very definitive and very clear. In some cases, there has to be more modelling around those channels to come up with it. But each of them has got their own sort of process, and then that is reconciled with production to, I guess, test and validate what's going through the supply chain.
Thank you. Martin, a question here, particularly for potatoes. I would say refer to the potato PDF has a lot of detail around over the last 10 years what we're seeing in potatoes. But the question is, what was the volume growth for potatoes over the last couple of years? Was the value driven by restricted volume?
Restricted volume. The value for potatoes, I think, was 100,000 tonnes, and I think I don't have in front of me whether that was all in processing. I think the processing did come back quite a bit. I think a lot of it was. So, and that's far too big an increment for the fresh market to change by. So yeah, it was a big increase, and largely in processing, if that helps.
Thank you. And again, I think there's going to be recordings, links, everything circulated post this webinar to look at the handbook data, which is all now live on the Hort Innovation website as well. So encourage people to go and have a look at that as well. Martin, a question here, some big wins for growers in 23-24. Would we expect to see any significant changes to these numbers for 24-25, noting some of the recent events, including the floods in Queensland?
I think the adverse weather in Queensland may restrict some supply. My information is that there hasn't been too drastic an impact on production. It's mainly the logistics and the freight of getting it out. So, and that'll be affecting it now, and it may affect returns. Less volume may make it. I think prices have firmed slightly. In terms of this year or next year, the vegetable growers are very responsive. The patterns over the years would show vegetable growers understanding the market and planting according to the market signals they received last year, and that may be reflected in the volumes that are produced next year. In the fruit area, it's really all about, can we carry on with the export, and it looks good. So I would say the prospects in front of fruit are a little more optimistic because they've got a wider range of distribution channels than perhaps the veggies might. But the veggies are good at responding to market signals, and I expect will do so.
Martin. But one question here. I was just wondering if there is any possibility of getting a better price this year for macadamia nuts. I don't know how much Martin and I have to play in that one, unfortunately. But as we kind of, the data really highlights is that the 2023 season was particularly hard for macadamias. Again, the story for nuts and for macadamias in particular was it was a year of recovery. But again, is still not quite the highs of the 2019-20 season as well. So yeah, the data is showing some difficulties there. Which categories, Martin, another question, which categories are seeing the strongest growth in exports?
Well, avocados percentage-wise had an amazing year. They doubled what they were doing. We define 7 categories as being what we call top-tier exporters, where they're doing 40,000 tonnes each. Less, minimum, some of them substantially more than that, and they're exporting 50% of what they produce. Mandarins look like they're in a good position because they're positioned at an early season window. Table grapes are solid and good exposure. Navels continue to deliver. The carrots and the onions are mature, organised exporters who understand their markets and generate a premium. They're steady. I would say the fruit sectors would probably be in the best position to generate incremental growth, given the nature of consumption of fruit is potentially you can stimulate incremental consumption, and there's more chance of that. And we're hitting those markets at times when our seasonal windows in Southern Hemisphere setup gives us advantages. That's harder in the vegetables. Yeah.
Thanks, Martin. And we've got a question here. Do we know where the exports are going and where the growth has come from?
That is known. That is known. We have that profiled by market. Our knowledge of that extends to by market, by month, by competitive set. So that information is known. Yeah.
And I would encourage, it's been my answer for a couple of these, I'd encourage people to look at the introduction PDF, which contains a lot of all of horticulture and the trade trends that we're seeing for the industry as well. The diversification of export markets, I think over the last couple of years in Asia as well, is really notable across the categories.
Yeah.
And that's highlighted in the last 2 to 3 years of data as well. There is a lot there. It changes and kind of for each of the categories as well, and obviously is driven by the production trends that we see in the handbook. So there's a lot to dig into on that one as well. Martin, another question we've got here. Based on these statistics, how could we go about identifying which produce would benefit the most from marketing and advertising? What factors would we consider to support key sectors?
Thanks for that question, Liz. Groups of horticultural groups of fruit and vegetables tend up being considered similarly. So if you said you're going to promote a particular, you're going to promote a group of fresh fruits, you'll end up with consumers looking at those as alternatives and making calls about the seasonal appeal and volume and value of those products. It's a tough question to say which ones have the most potential for to benefit from advertising and marketing, because when the shopping trip and the whole decision-making framework for people buying fruit and vegetables involves, a level of planning and then quite a high level of, well, what looks good? Will I get it? So they're very, very influenced by seasonal availability, what's in front of them, and the relative value of those products, which is shaped substantially by the seasonal supply profiles of the products themselves. If I was going to try and determine where you might add value, I would map out the seasonal supply windows, look at the volumes, look at the nature of consumption of the product. Can it stimulate incremental consumption, and probably weight those factors as more attractive considerations.
Wonderful. Thank you, Martin. We're getting towards the end of our time, but I'll just a couple of more questions. Martin, there's a couple of questions here around the US. And what risk does the current trade position of the US present to the Australian market?
Bit hard to comment on that. That's like trying to predict Trump, which is, a lottery. I don't understand the scope of their reviews. I know that we are succeeding with some citrus into that market and generating premium. My understanding of the trade patterns is that South America is predominantly supplied by South and Central America, and their proximity and I guess land freight base to get product into those markets leaves them at a huge advantage. So if we go into those markets, it's at a premium. It's unlikely to be cost competitive, but that's okay. We can survive on some, and we do quite well on some citrus. You've really got to wait for the whole trade relations agenda of the current administration to level out to make more informed comments on that, I think.
Thanks, Martin. And I think obviously a lot of it to be confirmed or understand how this plays out, but we know that for the 23-24 financial year, that Australian produce or America only made up 2% of all imports of Australian produce as well.
I wouldn't rate it as a high growth opportunity, particularly because of the competitive set of Central and South America being significantly advantaged. I would focus on what's north of Australia rather than North America.
Thank you. And Martin, I might use this as the last question we've got here. Do you have any insight into which produce or groups growers are increasingly using traceability systems for produce?
I think that's uniform, Lucy. I don't think there is a sector in fruit and vegetable production in Australia that wouldn't have an element of traceability in what they're doing. I think that's almost like a staple mandatory thing to have in place in the current supply chain.
Well, thank you for that. That brings us to the end of the webinar today. I'd like to thank you, Martin, for joining me here on this session, for everyone for asking questions and for sharing your insights as well. I really appreciate it a lot. The handbook is accessible via the Hort Innovation website now. We'll also be putting a recording of this session online, which will be available after the session, as well as any responses to the questions that we didn't get to answer today. If you have not already, you will be shortly receiving a post-webinar survey as well, and we'd love to hear your thoughts and any feedback that you have on the webinar today. Thank you again so much for joining us, and we hope you enjoy the Hort Stats Handbook across your area of work. Thank you.
Thanks, Lucy. Thank you for your efforts and the way you handle the detail. Pleasure to put it together with you. Okay.
Thank you, Martin, and reciprocated.
Thank you, Rob.